Last week, Thomson Reuters crashed. Now, if you check the financial news, they will tell you it was the market reaction to Anthropic launching a legal analysis tool. But let's be honest, you already knew that. Everyone knew that. We have known for a year that Anthropic, OpenAI, and specialized startups like Harvey were coming for the legal sector. The technology itself was not a surprise. So why did the stock collapse now? Why the sudden violence in the price section? Because the market stopped treating AI as a risk and started pricing it as a certainty. For 2 years, the consensus thesis was AI will help lawyers work faster. That is the Copilot thesis. It's bullish for software companies because you sell more seats and charge more per user. The chart you saw last week is the market pricing in the replacement thesis. It is the realization that the entire business model of search, synthesize, and bill by the hour is going to zero. We are not seeing a tech upgrade. We are seeing the removal of the middleman. And this isn't just about lawyers. It's about consultants, accountants, and coders. Anyone whose job is to sit between a problem and solution. Today, we're going to execute a deep dive into the zero marginal cost of labor. We will break down the search and synthesize loop and explain exactly why the seat-based software as a service model is facing an extinction event. We're going to look at the geopolitical chess match, specifically ByteDance's aggressive move to commoditize the operating system of the intelligence. And we are going to break down the ghost internet, a new economy where agents talk to agents, and the human user interface becomes a relic of the past. Welcome to Growth. I'm Sean, your guide to money and navigating the frontier of innovation. To analyze the depth of interface, we need to clear up terminology first. You hear agentic AI everywhere. It's become a buzzword used by marketing teams to sell you the same old chatbot. I'm going to give you the precise mechanical definition. We will look at System 1 versus System 2. I will explain the specific algorithm, like Monte Carlo Tree Search, that allow a machine to pose and reason. I'll explain why that pose is the most expensive and valuable commodity in the digital world right now. Next, we will look at the ghost internet. We'll discuss the rise of platforms like Multibook and the OpenClaw protocol. These are the networks where bots are already trading with bots, effectively bypassing the human web entirely. We will ask the question, what happens to brand loyalty when the customer is a script that runs on Python? Then we will dig into the geopolitical bear case. Everyone is talking about DeepSeek, lowering the price of intelligence. That's just the tip of the spear. The real threat is ByteDance. Yes, the maker of TikTok. I'm going to show you how ByteDance is using its do-bow to turn the entire device, your phone, your earbuds, into an AI funnel, effectively rendering American apps irrelevant. Finally, I'll deliver the verdict. A comprehensive look at how to position yourself when the cost of intelligence drops to zero. Let's look at the actual mechanism of the crash. Why did Thomson Reuters bleed? Companies like Thomson Reuters, Chegg, and Elsevier all sell the same thing, friction. They own a massive proprietary database, case law, medical journals, textbook answers. But the database is hard to search. It's messy. So they rely on humans to bridge the gap. In a corporate world, I call this search and synthesize loop. Let's look at the life of junior associate at a law firm. Step 1, search. You go to Vestigial. You type in keywords. You get 500 results. Step 2, synthesize. You read the cases. You filter out the noise. You find the relevant precedent. You connect the dots. Step 3, output. You finally write the legal memo. Now, Look at the bill. The client pays $500 an hour. They aren't paying for step 1, the search. They aren't paying for step 3, the output. They're paying for step 2, synthesis. They're paying for the biological processing power of the human brain to filter information. Vertical AI agents, like Anthropic's new legal integration, don't just help with this loop. An agent doesn't search, it solves. It ingests the repository. It reads all 500 cases in seconds. It simulates the legal argument. It checks for errors. It outputs the final filing. It does this for the cost of electricity, maybe 20 cents for inference compute. This is a deflationary shock. If you are a B2B software company charging per seat, you're in trouble. Because in an agentic workflow, there are no seats. There is no human staring at a dashboard for 8 hours. There is just an API call. If your revenue depends on human inefficiency, your revenue is about to evaporate. So, what changed technology-wise? Why is this happening now? To understand this, we look to behavioral psychology. Daniel Kahneman, a Nobel laureate, coined the terms System 1 and System 2 to describe human thinking. System 1 is fast, automatic, and intuitive. It's your gut reaction. It's 2 plus 2 equals 4. System 2 is slow, deliberate, and logical. It's you solving a complex math problem. It requires effort. Until recently, all large language models were System 1. They were just next token predictors. When you asked them a question, they didn't think. They just statistically predicted which word likely came next based on their training data. That is why they hallucinated. They were guessing. They were taking the path of least resistance. The shift to agent is the shift to System 2. We are now using algorithms like Monte Carlo Tree Search. This is the same logic DeepMind used in AlphaGo to beat Lee Sedol, a former Go champion. Instead of just blurting out the next word, the AI runs a simulation. It explores a tree of possibilities. Imagine the AI wants to write a line of code. It asks, if I write this line, will the program crash? It simulates the future. It sees the crash. It prunes that branch. It cuts it off. It tries a different path. What if I use this library instead? It simulates again. Success. It does all of this before it gives you the answer. This is called inference time compute. We are trading time and energy for accuracy. The pause, that 10-second delay while the model thinks, is where the value is created. This is why the hardware trade is still robust. We are moving from a world where we query a database once to a world where we simulate a problem 1,000 times to get the right answer. Now, take that reasoning capability and hook it up to the web. You get the ghost internet. Right now, you're seeing the rise of platforms like Maltbook. Think of Maltbook as a social network, but humans are not invited. It is a marketplace where agents go to find other agents. They communicate using protocols like OpenClaw. Why does this matter? Because the current internet, World Wide Web, is built for human eyes. It's full of CSS, buttons, white space, colors, and banner ads. All of that is friction. It is wasted data. Machines don't need buttons. Machines need JSON. JSON is just raw text data. It's how computers speak. In an agent-to-agent economy, the user interface becomes vestigial. Let's say I want to book a flight to Tokyo. In the old world, I go to Expedia, Google Flights, whatever you prefer. I look at the photos. I click the buttons. I ignore the ads. In the new world, my personal AI agent talks to the airline's sales agent via API. They negotiate the price. They check the seat availability. they execute the payment. I never see the website. I never see the ad. And I never see the brand logo. This is the death of the eyeball economy. If you are a company that relies on brand affinity or user experience to sell a commodity product, you're invisible in this new world. The brand is just one single row in a database. If your product is 1% worse or 10 cents more expensive, the agent will ruthlessly optimize you out of existence. Now, let's talk about the geopolitical threat. Everyone in the valley is focused on DeepSeek. DeepSeek proved that you can build a frontier model for chip. That's a pricing shock. It forces OpenAI to lower their prices. But ByteDance, the owner of TikTok, is executing a structural shock. DeepSeek is playing the software game. ByteDance is playing the ecosystem game. Look at their Dubao. In China, Dubao isn't just a chatbot app. It is becoming the default voice on millions of hardware devices. They're integrating their AI directly into the hardware layer, into phones, into earbuds, into smart glasses. They're spending $23 billion in 2026 on AI infrastructure. Why? Because their goal isn't to sell you an AI subscription for $20 a month. Their goal is to make the AI the operating system. Think about it. If you have an AI in your ear that handles your shopping, your scheduling, and your search, do you ever open the Amazon app again? Do you ever open Google? No, you just ask Dubao. ByteDance is trying to become the super app of intelligence. They are using the free model to capture the user, and then they will monetize the transactions that the agent executes. This is the commoditization of the intelligence layer to sell the action layer. While American companies are fighting over who has the smartest chatbot, the Chinese firm is trying to own the interface of the reality. This leads us to the final and perhaps most terrifying problem. If intelligence is free and agents are infinite, the internet becomes a dark forest. We're already seeing this. Look at the comments section of X, Twitter. Look at your spam folder. As agents proliferate, 99% of online traffic will be non-human. Bots talking to bots. Agents scamming agents. We're entering the high entropy state. The signal-to-noise ratio of the open web is collapsing. So the question is, where is the product? What do we actually buy in this world? If content is infinite, content is worthless. We don't know exactly what the new product will be, but we know what the problem is. The problem is proof. In a world of infinite fakes, the stamp of reality becomes the only asset that matters. This is where crypto, and I don't mean the meme coins, I mean cryptographic attestation, might finally find its product market fit. I'm talking about digital watermarking. I'm talking about a private key that proves this video was filmed by a real camera and this email was sent by a verified human. We're moving from an economy of attention to an economy of verification. The product of the next decade is not the software, it's the filter. So, the interface is dying. The middleman is dead. How do we position for this? First, the wrappers. Look at your portfolio. Do you own companies that are basically just a nice user interface on top of someone else's database? Do you own productivity tools that charge per sit? They are the buggy whip manufacturers of the agentic era. They are standing on the tracks, and the agentic train is not stopping. If their main value proposition is we make it easier for a human to click buttons, I will sell them. Second, the factory. We are moving from training to inference. from one-time cost to recurring, constant cost. System 2 thinking requires massive, continuous compute. Every time an agent pauses to think, it is burning electricity. So, don't just bet on the software. Bet on the physical constraint that allow the software to exist. There are 3 categories here. Number 1 is the engine. Companies like Nvidia. The market thinks the demand is peaking. It's not. As we shift to inference-heavy agents, the demand for GPU hours doesn't go down. It compounds. Number 2, the fuel tank. For now, SK Hynix, Samsung, and Micron. You cannot have a fast engine with a thin fuel line. Agents need massive amounts of high bandwidth memory to store the context of their reasoning. They are the only ones who can build these memory skyscrapers at scale. Number 3, thermal management. Chips are getting so hot, they're physically melting air-cooled racks. We are seeing a forced migration to liquid cooling. Whether it's Vertiv or Eaton or specialized component makers, the companies that keep the data center from catching fire are the new utility stocks. Code can be easily generated now. Electrons and heat dissipations cannot. Finally, there's the speculative bet, the verification. I would watch for the platforms that solve the dark forest problem. The winners won't be the ones generating more content. They will be the ones filtering it. Watch for protocols that verify proof of human. That may be the Visa and MasterCard for the next decades. Let me end with final thoughts. The chatbot was a toy. It was a parlor trick. The agent is a worker, and it is willing to work for electricity. But let's look further. What happens when the cost of smart hits 0? We are living through the Industrial Revolution of the mind. In the 1800s, the steam engine replaced muscle. It devalued physical strength. The strong ditch digger became obsolete. The excavator operator became the new master. Today, the agent is replacing cognition. It is devaluing mid-level processing. If your job is to take information from column A and move it to column B, your economic value is approaching 0. But this creates a new scarcity. When smart is abundant, human becomes premium. Paradoxically, the more AI we have, the more we will pay for actual human connection. We will pay a premium for a human therapist, a human teacher, a human caretaker. Not because they are smarter than AI, but because they are real. We are moving from an information economy to a care, trust-based economy. The question is no longer what AI can do. The question is what is left for you. See you in the comments below. This was Sean from ByteSpark. If you enjoyed the video, press like, subscribe, and don't forget the notification. And if you want a written version of this video with full references, subscribe to our newsletter. Thank you for watching. Until next time.